Yolanda, we had a reasonable start this morning following those better than expected consumer confidence numbers out of the US last night, and of course that positive close on the Dow. But we have seen a bit of a pullback as we head into the afternoon.
We're thinking that the pullback is purely on profit taking this morning. We have US durable numbers out this afternoon, and that really is the indicator that shows that consumers are spending again. And I think there are a lot of investors who are quite nervous about that number, so profit taking across the board.
So although we had those very positive consumer confidence numbers, we really need those durable good numbers and the other numbers out of the US to sort of back them up, I suppose.
Yes, because consumers will purchase clothes and food, but the real indicator of the end of the recession will be an increase in durable goods sales.
And of course, we have seen that in South Africa. While retailers like Shoprite are doing very well in this environment, other retailers like Massmart, which are more exposed to the durable goods market, aren't doing nearly as well, are they?
Yes, you've seen an increase, especially with Shoprite's numbers out yesterday, that consumers are not lowering the amount of product that they're buying, and retailers who have exposure to the lower end of the market and with higher inflation coming through over the last 5 years have really benefited from this trend.
Well, of course, we have seen those consumer inflation numbers out in our market just a few minutes ago, and they show that CPI rose by 6.7% in July, and that was down from 6.9% in June, but not nearly as good as the market was expecting. The market was looking for a number of about 6.6%.
Yes, if you look at the breakdown of the number, the higher CPI number came through from utilities, your electricity tariff, which contributes to about 0.5%. And if one really takes away that number, we see that CPI could have come in at 6.1, which really feeds into support that we might get an interest rate later in the year.
Is that the view from Nedbank Capital, that we could have another interest rate cut this year?
Nedbank's view is that we'll have a cut of 50 basis points in either September or October. So definitely that number is definitely supporting that view.
Just looking at some of the results we've had out today, we've had Imperial out with numbers. They were better than expected, it looks like. Their share price up 1.1%, so going against the trend in the market. What was your view on those results?
The results came out above expectations, which the market definitely liked. I think if you look at the number, it's really an indication of where the economy is now. The lower new cars sales, the freight numbers came in lower. They seem to be quite optimistic in the long term. They're saying that they expect that we've reached a bottom, and they're looking at acquisitions within South Africa in terms of vehicle companies. Going forward, I think those results are quite positive and really kind of bolstering the end of a recession in terms of their view.
Mm-hmm. Of course, because they really are, as you say, seen as a bit of an economic barometer, more so than the resources stocks, which are really directed by what happens internationally. So, I mean, just going by that, would you expect the economy to come out of recession by the end of the year?
Nedbank's view is that we most likely are not going to come out of recession for until the end of the year. We're expecting a year figure of -2 in terms of contraction, and only really positive GDP growth in 2010, 1.6. So, those numbers also indicate a very low level of recovery, but a recovery nevertheless.
Well, you did mention that Imperial was looking at acquisitions, and of course this is probably a very good time to make acquisitions in the market if you can raise the financing, so good for companies that are cash flush. Yes,
unfortunately, credit is quite tough in South Africa, but if we look at hopefully, a good positive turn, bottom of a recession, I think we're going to have banks, reducing their credit, not perhaps reducing their credit or lightening up on their credit criteria, and we could see more acquisitions coming through in the next 12 to 18 months.
Of course, we had a second trading update out of Sasol this morning, not nearly as negative as the trading update it put out in June. Its share price is a bit under pressure today, down 2%, but of course we do have the oil price under pressure. What did you make of that trading update?
In the trading update, they've come out to say that they've overestimated the effect of the negative rand, and they've seen Brent spot increase and the product prices increase. I think it's quite positive for them. The view of the rand, however, is that we could see the rand quite strong for the next 6 months. We saw Brent oil hint, it looks like a resistance level of $75 a barrel. So I think positive for them going forward. We'll just have to watch out for Brent spot going forward.
Yolanda, just assuming we get some more positive data out of the United States this afternoon in the form of those durable goods numbers, do you think we could see the rally that we've seen over the past couple of weeks continuing?
We could. If one looks at international markets, they've literally had or come out of a head and shoulders formation. So one could see us, rally quite dramatically in the next 6 to 12 months. If data keeps pointing to the fact that we are coming out of the recession, we are seeing a lot of international players buying property and buying commodities. And if you have a look at your bigger brokers in the States, they're really banking on a strong commodity cycle. They're hiring rehiring commodity traders. So we really could see a nice bull trend.